What is good, gang? Today I'll be taking you guys through May 30th's AM price delivery, where I'm at coming into the session, where I am to close out the week and the month, and what I think we'll be getting going into the first week of June. So here is your NASDAQ daily chart. Here we see that the 23rd of May has created an outside candle and price has been accumulating inside this candle since then. Now bringing us down to the 4-hour. Alright, I want to pull up ES as well. I want to pop this window out real quick. So ES is the giveaway that we were looking for sells even inside this range. Here we had sales I was looking for last week where we had this high and price was accumulating above it. So I wasn't looking for sustained shorts until we put a body or a aggressive move into this, and obviously what came after that was the shift in structure. But a lot of people thought that this was going to be, the Judas lower to then take us higher, and look what we deliver here on the 4-hour when we trade back into old all-time highs. You have SMT at the highs, breaker block, order block, take your pick, 4-hour, that's at the highs. So obviously getting to today's delivery, really what I was looking for was super basic, super easy, just internal to external on the 4-hour. Here, because I need to target this low in order to seek higher prices. Now there's two reasons for that. One, this is a parent range, so when I see clear accumulation inside of a range, I use one side of the range to order pair to target the other side of the range. Also look at your weekly chart. Your weekly chart so far is inside, and this is just, clear as day, internal to external after we traded to yearly opening price. Here's your yearly opening price. And then here's your mitigation block or breaker block, whatever you want to call it. It's entirely up to you. And then here's your fair value gap that overlaps with that. So I'm looking to get into this area. How deep will depend on the delivery. And then I'll look for 4-hour market maker buy models to ensue from around here. But getting into today's delivery, as I said, I was looking to frame 4-hour internal to external. So dropping into the 15-minute, here's what I originally noticed for the day. Even though after midnight, right here, here's your midnight opening price. Here's midnight price. We just range. Yes, there are SMT at these lows between ES and NQ that you can frame longs off of, but for me, these are still smooth edges that will be, likely revisited later. So what I saw coming into the session was two areas of accumulation on the buy side of the curve. One area, and I'll make all of these green. Alright, so here's your original consolidation. Make that blue. One area of accumulation, and then 2 areas of accumulation. Now, anyone who's trading market maker models knows that you can typically expect a retracement after 2 areas of accumulation. So when I saw 8:30 news deliver us into our point of interest to take shorts in, while ES failed to do so, I knew when I was waiting for 9:30 open, I was looking for SMT to be created at these highs and then start to deliver sell side. Now let's drop down into the 1 minute after annotating this 15-minute order block. All right, hopping into the 1 minute. Now what I meant when I said was I was looking for SMT. So we already traded into our point of interest and we created SMT up here at these highs. So me personally, I know I didn't need these highs revisited to start getting back into short opportunities. So we're gonna take these boxes off and extend these lines out in time, these liquidity pools. And then this is what I was looking at coming into the open. I saw two areas of accumulation on the left side of the curve. SMT, my point of interest, framing an internal range to external range liquidity run. 9:30 opens. Here's your 9:30 candle. This aggressive down candle right here. Now look what ES does. ES runs that high, and I don't have it charted here because this is just the compare tool, but in this run right here, ES tags into that 4-hour sell side imbalance, buy side inefficiency that's annotated here. So now both of them have reached our short point of interest. We've recreated SMT at the highs, and then we've also souped liquidity on the open while NQ failed to do so. So as soon as I saw that, my entry short is in this wick right here, up here. Once I saw it fail, we have all the pieces in play. We have SMT, we have liquidity when ES rendered out, we have our point of interest. So my entry is here, targets were here and here, and then I closed full upon this closure right here. So that was trade 1 for the day. Stop was at this high. So here's what that looks like for you. I don't remember exactly where my trade was. I can pull it up, but I really don't care. This is what that looks like. So not obvious. It is a 4.4 to 1, but I took partials here. So 2.2. So it's like a 3.5 R on the trade, and then coming into the 10 o'clock hour, which is typically where I find myself taking most of my setups. Here you have SMT at these highs. ES is making higher highs while NQ fails to do so. So I was inclined to enter. We had 15-minute SMT on the 15-minute order block. For me, I wanted a more confirmation, because even though I was framing to hit these lows, I saw the potential of a classic buy day because we did run lower into a liquidity pool. We did form SMT at the low of the day, and then we did distribute higher. And in a buy model, so continuations can form from the areas of reaccumulation. So after I saw that both areas of reaccumulation, it wasn't required for price to trade to these lows. So me personally, I was waiting for more information. Not only that, but for me, this stop loss here at this high, because that would be the SMT, likely wouldn't be this. It would likely be the range high. And for me, even though I can get over 2-1 out of it, I just don't like trading with a stop that big. So I waited for more information. More information came at the first 15-minute candle of the 10 o'clock hour. here is your opening price. 10 o'clock trades up, creates SMT, displaces lower below old lows. We form our breaker. And then my entry for that was when we traded back up into this order block right here. That was my entry short, targeting overnight lows. So this was where I took my trade, and then I had a runner for this rejection block. Now granted, I thought that we were just going to run out the liquidity, but when I target lows, especially old lows, I'm not going to make a fuss over a couple of points because price could run back, take us out up here, and then just run out the liquidity later. So I don't like to hold through that. You know, some people will say whatever they want. It's just personally what I've noticed and observed, and this, you know, works for me. Because me personally, after I see price come within a couple of points of my take profit and then retrace like this, I will likely see this and just cut it. So I've cut that out by making my targets as such. So I hope this was helpful. Like I said, I'll be uploading here more often. Like I said, feel free to drop comments about questions. You want analysis on something, price action, concepts, whatever it is, you know, I'll make a video on it. So until then, I hope you guys have a good, you know, rest of your week, and we'll talk soon.